Good morning, students. I am C. Ankit Sharma. Again, your income tax faculty for the today's session. And today we will be discussing or we will be continuing our topic that was PGBP. This is our third session for PGBP, of course. And in the last two sessions, we discussed the introduction part, the format part, the depreciation, additional depreciation, scientific research provision, etc. So I believe that you all are, of course, studying very, very, very hard to achieve the goal for your life, that is to becoming a chartered accountant as soon as possible. So after the PGVP, the capital gain topic, and of course, income from other source. Also, I am going to take the classes for capital gain as well as income from other source. That will be completed till 26th of December. So till 26th December, we will be again together. So once again, good morning, Sat Sri Akal, Suprabhat, Namaskar, Subha Bakhair, Kem Cho, Vanakkam, Kasakai, etc., etc. I welcome you all in our today's session for income tax. So good morning wishes from Almas. Good morning. Divya, good morning. Devraj, good morning. Ramadevi, good morning. Ajay, Sushil, Neha, Kiran, Sankaran. Okay. Priyanka, Avantika, Kadambri, Priyanka Pandey asking, good morning, sir. How are you? I am fine. I hope you all are also doing good. Okay. Basavaru Ju Ji, good morning. Swati Srinivasan, good morning. Next, Gopinath, Beluz, Hemlata, Prince, Mamta, etc. So, Srinivasan Venkatraman asking me house property, test your knowledge question 4 and 5. Yes, I have solved that question in the simplest way. So, you will understand how to solve those house property question. Just give me a second. So before starting the class, let's solve the problem of Mr. Sankaran. He was asking me continuously from so many days, and I have solved both question of test your knowledge of house property, and these are the questions. Question number 4 of house property, that was Mrs. Rohini Ravi, a citizen. So I hope you all solve this question, and Mr. Srinivasan has some issue in that question. So let me help him. In just 5 minutes, we'll be able to solve both the questions. So first of all, question number 4, that is test your knowledge. Illustration number or question number 4, in which Mrs. Rohini has 3 flats, I guess 3 residential properties. That is, one is Los Angeles, the other is in Chennai, and the other is in Bangalore. Income from house property. It will take just 2 or 3 minutes to solve both the illustration. So this is self-occupied as per the question. This is self-occupied as per the question. And in this case, we recover area of rent of rupees 60,000. Clear? So in case of area of rent, we have discussed the provision under income from house property that if any area of rent has been recovered, then 30% will be allowed as deduction. Balance is, that means 70% is going to be income from house property. So in this case, balance 70% will be 42,000. That is my income from house property. Now the question asks that you have to solve this question once under the optional tax regime and once under the default tax regime. So under optional tax regime and the default tax regime is differences that self-occupied property cases, you cannot claim interest deduction under default tax regime. So let's solve under default tax regime first. So if it is a default tax regime case, then in this case, annual value of 2 houses can be nil. So these 2 houses value will be nil. So that is my income from house property, 42,000 rupees. That is the answer. But suppose if this is under optional tax regime. Again, even in optional tax regime, the Bangalore property value of income will be remain same because no difference in that. But in case of Los Angeles and Chennai, both are self-occupied. The difference is just the claiming of interest, Mr. Sankaran. Okay. So annual value will remain nil in both cases. Now interest deduction just need to deduct. There is no interest deduction in case of Los Angeles house property. It will remain the same. Now we have two interests, current year interest and PPI in case of Chennai property. In case of Chennai property, the current year interest has been given in question. That is 50,800 plus 1,31,300. So current year interest is 1,82,100 and the pre-construction period interest has been specifically given in question. That is 49,200. That has been stated in the question that this is before construction interest. So that will be 1/5 we can claim as 9,840. Total interest deduction that will convert it into our house property loss, that is 191,940. This is my loss and this is my income under house property. We can set off these income and that will be my answer 149940 under optional tax regime. Okay. Now second illustration of your was, that's a very good question. The question number 5 is really interesting. Question 5 says, suppose there are 8 units and that has been divided into 2 persons, Mr. Arun and Bimal. Clear? We have 8 properties equally divided into Arun and Bimal. They both are using one as a self-occupied and remaining 3 as let out. One self-occupied for both and 3 let out, both for Arun and Bimal. So we should solve this question separately. One is for self-occupied for Mr. Arun and balance 3 is let out. And same in case of Bimal. But there's a problem in this question. If you read this question carefully, you will see in the question it has been given that 1 unit out of the let out unit, 1 unit out of the let out unit remain vacant for 3 months. Remain vacant for 3 months. So that means in 1 unit, case number F is applicable because it's let out and vacant. But the problem in the question is this, it has not been given that this unit belongs to Mr. Arun or Bimal. We do not know this. So because the information has been not given regarding this vacant let out property, so we will solve this question combined and the income will be divided equally into Bimal and Arun. Listen me carefully. If in the question it has been mentioned that this unit belongs to Bimal or Arun, then in that scenario, we will solve this unit in the hands of Bimal or Arun as the case may be, and balance will be solved in the second case. But because the question is silent about these units belong to whom, so in this case, we have to solve the question combinedly and the total income will be divided equally. So now what will happen? The 2 units, we will solve it by units. So self-occupied 2 units, one is belongs to Arun, one is belongs to Bimal. And again, the same case under default tax regime. Annual value will remain nil in both situations. So that will be the answer of self-occupied properties, 0. Okay. Now we have remaining 6 units which are let out. Now we have to solve it. And I know what's the issue with you. The issue is regarding expected rent. Mr. Sankaran, you did not consider the expected rent case in this case because in this case, municipal value has been given 6,75,000. Clear? But you can see in this question, fair rent has not been given, but actual rent has been given. The actual rent has been given 12,000 rupees per month per unit. But the FR is not given. And I have told you if FR is not given, but the AR is given, then you have to calculate expected rent. That means annual value of these properties. So that will be 8,64,000. That means 12,000 into 12 into 6. So that will be my ER, whichever is higher. No standard rent has been given. So that will be my lower value. And because now we are in case number F, so we have to solve it as per annual rent concept, because we did not know which unit has been vacant. So if you will find the annual rent, that will again come 8,64,000, and both are equal. So if in F case both are equal, I have told you we will take this value, and because this value has been selected, then the vacancy rent of that 3 months can be deducted out of this value. I guess 4 months it is, I guess it's 4 months, not 3 months. It was vacant for, I guess, 4 months. Okay? So that will be 48,000, and our GAV will be 8,16,000. Then we deduct municipal tax, 1,35,000. Remaining provisions are very simple. We have our annual value, 6,81,000. Then we will deduct our 30% deduction and interest. That was 2,25,000 interest and the 30%. Remaining will be 2,51,700. This value will be divided into Arun and Bimal equally. That will 1,25,850. Clear? If that is not a default tax regime, it's an optional tax regime, then the let out unit part will remain the same. We just need to deduct the interest in this case. Annual value will be 0, but interest has been given 75,000 for those self-occupied properties. So 37,500 we can claim. I hope Mr. Sankaran, it's clear. Okay, now moving on to our thought for the day first. And this is our today thought for the day. That is decide, commit, and succeed. Okay. So you should decide the goal of your life, that you all have decided to become a chartered accountant. Then commit yourself. The meaning of commitment is not just that I want to be a chartered accountant. Commitment means you have to do those effort. You have to put those effort which is required to become a chartered accountant. Like you have to give your time to your studies, you have to sacrifice your party, etc. So that means commitment. Commitment just doesn't mean that you are just saying that I want to be a chartered accountant. That is not a commitment. That is your wish. But commitment means you have to put those effort which is required to achieve your goal of your life. So you have decided the goal, that is to becoming a CA. Now you are doing all commitment with your studies. You have to commit to your studies. You have to give a certain time. You have to sacrifice things to achieve this goal. And if you are able to do all the things like commitment, if your commitment is 100%, then you will be, success is yours. You will be succeeded to be a chartered accountant. You will achieve your goal definitely. So decide, you have done, you are in the process of commitment, and the final result is success, and you will be a CA as soon as possible. So this is the 3 basic ingredients to achieve any goal of your life. So these are the most important, we can say, components, ingredients that you should achieve to this is required to achieve the goal for your life. So now moving on to our provisions, that was PGBP. Let me see if there's any query regarding PGBP, then we will take it, and then we will move forward for the today's starting topic, that is sale of a scientific research asset. In the last session, we discussed the provision regarding the scientific research activities under section 35, in which we have seen that if you conduct in-house research before commencement of business, the provision regarding that, after commencement of business, the provision regarding that, and then again the outsourcing concept also. So let me see if there is any query regarding this. Divya is saying, sir, after 5 December in the schedule, no income tax classes. Do not worry, Divya, that will be updated soon before 5 December. So do not worry, I will be there for you till 26th of December. Okay. Okay, next schedule update ho jayega, relax. Okay, Miss Priyanka Pandey is asking, sir, yesterday I saw lecture schedule and I saw DT lecture still on 5th December merely. Relax, the schedule will be updated. Okay, next is Okay. Any query? Swati Krishnan, interest deduction of section 24B is not allowed under default tax regime. Under default tax regime, in case of self-occupied property, there cannot be any interest deduction, Swati. Okay. In question, it is given as Arun. Arun, and it does not matter the name, of course. Srinivasan asking how it's 25% and 75% has been arrived. Of course, it's 8 properties. And if out of these 8 units, 2 are self-occupied. So what is the percentage? Of course, 25%, Sankaran. It's simple. Proportionate, just it. If out of 8 properties, 2 are self-occupied, how much percentage? It's 25%. Okay. Next is Ms. Tunishka is asking, sir, what is the mean by non-obstance clause? I didn't understand the meaning on Google. Okay. Non-obstance clause mean the clause which is in the overriding effect. You might have read a word that is notwithstanding anything contained. This word you might have, this sentence you might have read in the law topic or in the income tax also. So that is the non-obstance clause. Obstance means obstacle. Okay. And non-obstacle clause matlab the clause against which no obstacle can work. So that means the non-obstance clause. And whenever you read this sentence, notwithstanding anything contained in, so that means non-obstance clause. The language we use for the non-obstance clause is notwithstanding anything contained in the specific section or the act. So non-obstance, you understand that clause which is in the overriding effect over the other section or the act. That's called non-obstance clause. Okay. Next is, okay, good morning, good morning. I hope it's clear, Tanishka. So now moving on to our next section, that is sale of an asset used for scientific research. Okay. So what are the concept, how we need to solve it? Let's discuss this. Sale of scientific research asset under section 35. So those assets which has been allowed deduction under section 35 or section 35 AD, both having same treatment. So if these assets has been sold, then how to calculate the income against the at the time of sale will be discussed over here. Now practically you should understand one thing. To understand this provision, let's discuss a very simple practical issue regarding this. Suppose there is a scientific research lab. Clear? We are business in the business, and for the business we have established a lab. The lab invent different kind of invention, or these are involved in scientific research activities. So we purchase some asset for this scientific research lab. Suppose a generator, fine. And because it's a capital asset, and suppose the cost was 10 lakh rupees. So because this generator has been purchased for scientific research activities, so under section 35, how much deduction has been provided upon this? 100% deduction, because except land, you can claim 100% deduction on scientific research asset. So that means deduction will be 35 lakh. Full deduction has been claimed. So if I asked you, what should be the book value of this asset after claiming the deduction? So 10 lakh cost, deduction section 35D, 35, again 10 lakh. So technically the value in the books will be nil. The technical value, fine. The book value will be nil now because we have taken the full value as a deduction. But now let me ask you a single question. Is the market value also become the nil? Suppose we have purchased this generator for 10 lakh rupees. Its life, its normal life, suppose 10 years. It will work for 10 years. But in the first year, in the books, we will claim the deduction of 10 lakh rupees. So in the books, its value is now nil. But is the market value will also become nil? No, because it will become nil after 10 years. So there will be some market value after 1 year, 2 year, 3 year, 4 year, 5 year. Now what happened after 4 years of use? Suppose after 4 years of use that generator, the company decided to sell that generator. So in the book, the value will be zero, but there will be some market value. Suppose the after 4 years, the market value is 5,50,000. So we are able to sell the generator at 5,50,000. So this section now describe what will be the treatment at the time of sale of this scientific research asset, where book value will always be zero. It's a universal rule. If there is any scientific research asset on which deduction has been claimed, the book value will always remain zero. But there will be some market value. So at the time of sale of that asset in the market, what is going to be the treatment in respect of this 5,50,000? This concept is going to be discussed under this section. I hope it's clear. So there is two provision regarding this, and very simple one. They are no difficult. Of course, they are very simple. So it says, if there is any scientific research asset under section 35 or any asset under section 35 AD. What is section 35 AD? We will be discussed after this section. Okay, but the treatment for both assets are same. So sale of scientific research asset, there will be two situations. Either it will be as per case number A or it will be case number B. Case A says that if you sold this generator after 4 years used for scientific research business purpose. So if you use this generator for 4 years under scientific research lab and after that you have sold this generator, then case A will be applicable. And it says if scientific research asset sold without used for any other purpose. That means you have just used that asset for your scientific research business and you have sold it after using some time for the purpose of scientific research business. So if this scenario is there, like the example in the question has been given, like you used it for 4 years and after that you have sold that in the market for 5,50,000. Now the case says, in this case, the net sale consideration, that means 5,50,000, the amount you received on the transfer of that asset at the time of sale of that asset, or the cost of the asset, the price at which asset has been purchased, or we can say the deduction has been claimed, that will be same. Whatever is the cost, 10 lakh. What will be the deduction? 10 lakh, same. So the cost, or we can say the deduction, that means in this case is 10 lakh. Whichever is lower is going to be your PGBP income. The lower will be your PGBP income. That means net sale consideration or cost, whichever is lower, that is going to be your PGBP income. Clear? Any excess, that means if net sale consideration exceeding the cost of acquisition, that will be in a rare case. Like it says, suppose if the net sale consideration is 12 lakh in this case, the cost of acquisition was 10. But suppose after 4 years, you are able to sell this machine over its cost price. That means net sale consideration is 12. In that case, capital gain provision will also be applicable. So if the net sale consideration does not exceed the cost, only you need to calculate the PGBP. And that is this simple, the net sale consideration and the cost, whichever is lower, your PGBP. But if the net sale consideration exceed the cost of acquisition, in that case, we will also find out the capital gain concept. How to calculate the capital gain? I will explain you in detail in capital gain chapter. For the time being, we will solve a question so you will be able to understand how to calculate a capital gain also. So that was the first case. But what is case B? Case B says, suppose we have purchased this generator for 10 lakh, and after 4 years of use, we did not sell it. We transfer this generator. We are discussing case B. We transfer this generator to our normal factory purpose. We transfer it from the lab to our factory or our office premises. We said that generator has now capacity to run. It can run in the factory purpose or it can be used for our office purpose. So we did not sell it, but we just transferred it from one department to another department. We have transferred it from scientific research lab to our normal business purpose. That means this has been transferred after 4 years from this to our factory and office. And then after 2 years using it, we sold it. So in this scenario, the case was we have used this asset only for scientific research purpose, and after using it for that purpose, we have transferred it. So that was the solution. But case B says if it is sold after using for our other business purpose. That means for factory, office, etc. Clear? So if this case happens, then there will be two situations. First situation, what will happen at the time of transfer? Transfer from scientific research business to normal business. What will happen at that time? And then what will happen at time of sale? So at the time of sale, capital gain provision will apply only. There will be no PGBP provision applicability. There will be only capital gain provision applicability. Clear? But at the time of transfer, when we transfer this asset from our scientific research activities to the normal business, then a very simple calculation need to be made. There's nothing to do. When we transfer this asset into our normal business, then the block of asset of our normal business, whatever the block of asset value of our normal business, suppose that was 30 lakh rupees. So when an asset comes into a business, it will add at the block of that activity, block of that asset to which it relates. So our block of asset normal having 15% of depreciation, and this scientific research is also plant and machinery having a dep rate of 15%. So that scientific research asset is going to be added to my block of asset. But the interesting part is that it will add a value that will always be 0. It will always remain 0. So asset number will increase. Suppose before this scientific research asset, there was 10 plant and machinery, cost 30 lakh. After adding this scientific research asset, now there will be 11 plant and machinery, but the cost will remain the same. That will remain the same, 30 lakh. Why? Because the full deduction has been already claimed, always. It's a universal rule. When any scientific research asset will fall under the block of asset of a normal business purpose, the cost will always remain the nil. The cost will always be 0 because the full deduction of 10 lakh we have already claimed in the first year of that asset purchase. So there will be no cost addition. The value will remain 0. At the time of sale, the normal capital gain provision under section 50 will be applicable. There is no PGBP concept will be applicable. There will be normal capital gain provision is going to be applicable. I hope it's clear. I can give you an example for this. Just a second. So these are the provision sold without having been used for other purpose. Clear? Where the scientific research asset is sold without having been used for other purpose, then what will be the PGBP? The net sale consideration or the cost of the asset? Whichever is lower is going to be your PGBP income. Any excess will attract the provision of capital gain. When the capital gain will be applicable? When your net sale consideration will exceed the cost price. Okay. Now, if you have sold that after being used for other business, the second case, the B case, where the scientific research asset is used for business after it ceased to be for scientific research purpose, then the block of asset value will be always increased by nil value. Only number of asset will increase, but no amount in fluctuation in that. In the time of sale, when you sell that asset, the normal capital gain provision regarding the sale capital gain provision under section 50 will be applicable. That how we need to calculate that we are going to discuss, or we will be discussing under capital gain section 50. Here is an example for you that Mr. Kishore purchased an asset for scientific research for 15 lakh rupees. Clear? That was the purchase price. In 15-16, in 22-23, the asset ceased to be used for scientific research. Other information has been given. PGBP before depreciation 5 lakh. WDV of the block is 10 lakh. The scientific research asset depreciate is 15%. The scientific research asset is sold for 25 lakh rupees. So you have to solve the question for both scenario. Suppose if it is sold without using for other business or sold after using for other business. So we can see if I'll solve it this question in short, then if it has sold without being used for other purpose. So the case says the net sale consideration which has been given in question 25 lakh or 15 lakh. Whichever is lower will be your PGBP income. The lower will be 15 lakh. And we have already given the profit before depreciation 5 lakh in the question. So that is the PGBP from scientific research asset. But total PGBP, for the purpose of total PGBP, we have to calculate other PGBP income also. So PGBP has been given before claiming depreciation 5 lakh. What is the block of asset value? 10 lakh. Dep rate is 15%. So after deducting dep, my net profit from normal business activity will be 3,50,000. So this is my PGBP normal. This is my PGBP from scientific research. So my PGBP income will be 18,50,000. Clear? Now this is long-term capital gain, and it's better that we or I will let you know how to calculate the capital gain under capital gain chapter, because there is indexation concept also that will not be, I will not be able to make you understand without understanding the basic concepts of capital gain. So in this solution, we will also see how to calculate the PGBP. So PGBP from scientific activity, it was 15 lakh, and from normal activity after depreciation is 3.5 lakh. That is my PGBP income, 18,50,000. Suppose it has been used for other business activity before the sale of that. In that case, the block value was 10 lakh. Scientific research asset will add having a zero value. So that will remain 10 lakh rupees. If you calculate the depreciation, it will be 1.5 lakh. The PGBP will remain 5 lakh. The capital gain concept solution has been given over there, but we will not going to discuss it over here because that will be discussed in capital gain chapter. So you can see that at the time of sale, in this case, there will be no depreciation. The reason is, in the case B, you can see, if we will solve case B in detail, the opening WDV is 10. The cost of the asset will remain 0. So that will be my 10 lakh value. Now this asset has been sold for 25 lakh rupees. So the format says opening WDV plus actual cost of the asset purchased and put to use and less money received. the format for calculating of depreciation. So because the money received is 25 lakh and we cannot reduce the WDV exceeding the cost of the block. So out of this 25 lakh, we can only reduce 10 lakh rupees. So there will be no value exist. Only scientific research asset has been sold, but now the value is zero for the block of asset and assets exist. But for the purpose of claiming depreciation, value and asset both must exist in the block. So because there is no value has been left, depreciation will be zero in this case. So the PGBP will remain the 5 lakh, there will be no depreciation. In A case, because the asset has been sold without using for normal business, so there is depreciation available because the block value available. But because in this case, that scientific research asset becomes the part of normal block of asset. So it is now the part of that block of assets. So if now that asset has been sold for 25 lakh rupees, so block value will remain zero. So no depreciation can be claimed. You can try this question again after the class, and if there is any issue, definitely I'm going to solve it for you. So these are the provision regarding scientific research, which we have discussed in the last class already. Now we have illustration number 5 on page number 3.234 of study material. It's for scientific research purpose. This is illustration number 5. And it's very, very simple because we just need to understand that which deduction can be claimed under section 115 BAC for scientific research activities and which cannot be claimed under section 115 BAC. So under default tax regime, we have discussed that the outsourcing payment, outsourcing concept for scientific research purpose cannot be claimed as a deduction. Only the in-house research can be claimed as a deduction under the default tax regime. So if we solve this question, we can see Mr. A furnished the following particulars for 23-24, compute deduction section 35 to calculate the PGBP. First option, he is under default tax regime. He is shifting out of the default tax regime. So for optional tax regime, both deduction available under section 35, whether it's in-house research or it's outsourcing. So as per the provision, amount be paid to notified approved Indian Institute of Scientific Research. This 1 lakh can be claimed only as deduction under optional tax regime. Under default, this cannot be claimed. So for optional, it is available. For default, it's not available. Amount paid to IIT, for optional, it's available. For default, it's not available. Amount paid to X Limited, an Indian company registered in India, which has been, again, this has been an outsourcing payment. It cannot be available under default tax regime. For optional, it's available. For default, not available. Now, these are the in-house research expenditure for scientific purpose allowable in both. And out of 7,50,000, 5 lakh belongs to land, and there is no deduction section 35 for the purpose of land. So it will be available both under both regime, but only 2,50,000. That means except the land expenditure. This is the solution part. It's a very simple question, of course. So you can see for default tax regime, the payment for outsourcing purpose for scientific research are not allowed as deduction. You can see in the solution. And for optional tax regime, the in-house research and the outsource both has been allowed. Clear? Only this illustration we need to do from study material. All the other illustration I have inserted in the notes only. Now section 35 AD. Now 35 AD is almost similar to section 35. So the concept for sale of scientific research asset and section 35 AD assets are same because the concept almost similar. So the scientific research asset section 35 says or said that if there any expenditure before commencement of business in respect of revenue for material and salary, and for capital all expenditure except land. So those expenditure can be claimed as deduction in the year of commencement of business. That was section 35. Now almost section 35 AD says the same. 35 AD has been applicable on 14 businesses. There are specific 14 businesses in this section 35 AD. What are those 35 AD 14 specified business that has been given in the notes? We will discuss that. Again, it says the same thing, that if you are running any of these 40 businesses and before commencement of business, you have incurred any revenue expenditure. Now this is larger extension to all the expenditure. As on section 35, they're only material and salary. But it says any revenue expenditure, if you are involved in these 14 specified business, then any revenue expenditure, as well as there is no time limit also. In the section 35, there was 3 years limit. There is no time limit under section 35 AD businesses. Any revenue or any capital expenditure which has been capitalized under books, so we can say in the books, deduction of 100% of both revenue as well as capital expenditure can be claimed in the year of commencement of business under section 35 AD. 100% deduction can be claimed except 3 expenditure. Only 3 expenditure has been excluded. One is, of course, land. Second is goodwill of business. And third is financial instrument. So any expenditure except these 3 before commencement of these specified 14 businesses, if capitalized in the books of accounts, then 100% deduction of those expenditure can be claimed in the year of commencement of business. It's this simple provision. So it's almost like there's no outsourcing concept, of course. So there is only simple provision, and the businesses like hotel, hospital, slum development, housing project, pipeline network, cold storage, sugar cold warehouses, honey beekeeping, fertilizer business, etc. We have the list of those, all 14 businesses, but the concept is very easy. It's just simple this much. This is section 35 AD. This is the list of 14 businesses. You can see I have highlighted the business name: cold chain, warehouse second, cross country, natural gas, hotel of 2-star, hospital, etc. So we have 14 specific business. The provision for all 14 businesses is same, that 100% of the capital expenditure. So you might have been thinking that we have explained revenue as far as capital, but the provision says only capital expenditure. So capital expenditure in this case include revenue also, because it says the expenditure you have capitalized. Suppose in case of a hotel building, before starting of the hotel, there is wages which has been paid to the workers, salary, material expenditure, etc. But ultimately that salary, that material, etc. is going to be the part of hotel, and hotel is a capital expenditure. It's a capital asset. So you might get confused that we have studied revenue as well as capital, but in the notes it just said capital expenditure. No, the capital includes all expenditure. That has been explained later also. So 100% of the capital expenditure incurred during the previous year, wholly exclusively for the above business, would be allowed as deduction from the business income of the assessee. There are only 3 which are not eligible, that is land, goodwill, or financial instrument. Again, the concept same as per in case of capital expenditure, that any payment exceeding 10,000, you cannot make that payment in cash to a same person, same day. If you do that, you cannot eligible to claim the deduction of that amount which has been paid in cash, etc. Again, section 35AD benefit is only available under optional tax regime. That is not applicable for default tax regime. So now you can see the concept what we were discussing, that expenditure, whether revenue or capital, both will be allowed. It has been proved over here. Further, the expenditure incurred wholly exclusively for the purpose of a specified business prior to the commencement of operation would be allowed as deduction during the previous year in which the assessee commenced operation of his specified business. The amount incurred prior to commencement should be capitalized. So whether it's in the nature of material salary or machine, both need to be capitalized and will be allowed as a deduction. These are the conditions. You need to just read it, just gone through it, of course. If deduction has been claimed in this section, the deduction cannot be claimed in any other section. This is a universal rule under income tax. A deduction can be claimed once, an income can be taxable only once. Set off and carry forward of this kind of expenditure, the loss of an assessee claiming deduction under section 35AD in respect of a specified business can be set off against the profit of another specified business under section 73A, irrespective of whether the latter is eligible for deduction under section 35AD. Now, this is the set off concept. For time being, we are discussing it, but again, this is a main concept of set off chapter. It says, for example, a assessee exercising the option of shifting out of the default tax regime provided in section 115 BAC can therefore set off the losses of a hospital or hotel which begins to operate after 1st April 10 and which is eligible for deduction under section 35AD against the profit of the existing business of operating a hospital or a hotel, even if the latter is not eligible for deduction. So if the nature of business is same, like you have a hospital or a hotel having a loss, and you have a hospital and hotel having profit, even the other one is not claiming deduction of section 35AD, but if it is same in nature, then you can claim the deduction. We can see with the help of an example, of course. Illustration number 6 we are going to discuss. So illustration 6 says, let me solve this for you. Illustration 6 says that there is a business which is eligible section 35AD for deduction, that is for grain, there is a warehouse. Then 35AD, one more warehouse, which is for sugar purpose. And SSE has one more warehouse, that is 35AD, not eligible. We can say not applicable. That is for oil purpose. For the purpose, it has been given that the investment in land and building in these three businesses are 80 lakh, for sugar it's 60 lakh, for oil it's 50 lakh. Out of this value, the cost of land has been given in question. So that is going to be reduced because we cannot claim land as a deduction. So that will be deducted. So remaining eligible is this. Some construction for building also done in the previous year. The value is which 20, 15 and 10. So this is also part of building. So now building part is 50 lakh in this case, 35 lakh in this case, and 30 lakh in this case. Now the profit has been given for these three businesses, 16, 14 and 31. And the question says, kindly calculate the profit after section 35AD deduction, etc. So we can see that we can claim deduction section 35AD in case of grain business, we can claim 50 lakh as a deduction. So that will remain 34 lakh loss. In this case, we can claim 35 lakh deduction. So our loss will be 21 lakh. And in this case, we cannot claim the deduction. We can claim the depreciation because this is not Section 35 AD eligible business. So we can claim only the depreciation on 30 lakh, which will be 10% as it's a building. So that will be 3. So we have 28 lakh rupees profit. So now we can see that they are warehouses and we can carry forward and set off this loss for the future purpose. We cannot claim the loss of these business out of this because the warehouse for oil is not allowed under Section 35 AD. It has not available deduction Section 35 AD. This is not relevant. The relevancy is the warehouses, the 14 business activities does not include warehouse for oil. So if it is a warehouse which is for sugar, but do not having the deduction Section 35 AD, then we can claim the set off. But because this business outside these 14 business, so we cannot set off the losses of these business out of this business activity. Clear? Next is, so that was the business. You can see the solution we have, of course. So we cannot set off the losses from one activity to another activity in this case. There is a reason, you can go through it, of course. Illustration number 7, it says, Mr. Suraj, a proprietor, commenced operation of the business of a new 3-star hotel in Madurai. So this is included in the 14 list. Tamil Nadu on 1/4/23. He incurred capital expenditure of 50 lakh during the period January 23 to March 23. We can solve this over here only. So there is a capital expenditure from January till March 23, that was 50 lakh rupees for the business and capitalize the same in the books of account as on 1st April 23. Further, in 23-24, that is our relevant previous year, the capital expenditure of 2 crore has been, out of which 150 crore was acquisition of land exclusively for the above business. So out of this, 50 lakh is for building and 1.5 crore was for land. That cannot be claimed as a deduction. So this is my expenditure. That means 100 lakh rupees. Now compute the income under the head profit and gain. Suppose you have the business income of question, the net profit has been given 25 lakh. So if the net profit is 25 lakhs, we have to claim deduction of Section 35 AD, that is 100 lakh eligible for building purpose. So there will be a loss of 75 lakh rupees in the question. Now in the case, it has been given. In this question, there is a information also given that the profit of the business is this 25 lakh, and you can see now this business profit was 25 lakh regarding this, and assume that he also has another existing business of running a 4-star hotel in a Coimbatore. So 4-star hotel also eligible for under these 14 business activities. Even that, this 4-star hotel does not have any 35 AD deduction and the profit is 120 lakh has been given. So now this loss can be set off out of that hotel business because that hotel business even does not cover a Section 35 AD, but the nature of that business covered under 14 business which has been specified. So now thus after set off, we have the profit of 25 lakh rupees. So you can see in illustration number 6, we have 3 warehouses. Those as a business covered under those 14 business, warehouse of sugar and grains covered. But warehouse of for oil is not covered for those 14 business activities. Even it's a warehouse, but this warehouse does not cover under those 14 businesses which has been specified under Section 35 AD. So loss cannot be set off. Illustration 6. After that, illustration 7, we have a hotel. covered in section 35 AD, eligible for deduction, having a loss of 75 lakh. We have one more hotel, reduction 35 AD not available, but it is included under those 14 businesses which has been specified in a section 35 AD, having a profit. So loss can be set off. So availability of deduction does not matter for the purpose of setting off, but the eligibility of business matter for the purpose of setting off of losses from one business to another business. Next is illustration number 8. Kindly solve it by yourself. Okay, fine. I have to solve it for you because there's a separate provision also. This is section 35 AD 7B. What the provision says, the other condition section 35 AD says that if you have claimed deduction under section 35 AD in respect of any expenditure, then you have to continue that business for at least 8 years. You cannot transfer that business, you cannot transfer that asset on which section 35 AD deduction has been claimed. For example, I have constructed a hotel in which I have used plant and machinery for 20 lakh rupees and claimed 20 lakh rupees as deduction under section 35 AD. Now we cannot transfer that plant and machinery for next 8 years. That means we have to use that asset in the same business if we have claimed deduction under section 35 AD. What if we transferred that asset? So the provision says if you transfer that asset before ending of 8 years, then that deduction you have claimed will be disallowed and that will be deemed your income in the year of the transfer. So what is the concept? This highlighted part is discussing this regarding. As per section 35 AD 7B, after this topic, I will take the queries, of course. As per section 35 AD, if asset is used for any purpose other than the specified business during 8 years, beginning with the previous year in which such asset is acquired, the total amount of deduction so claimed and allowed, whatever deduction you have claimed in any previous year in respect of such asset as reduced by the amount of depreciation allowable in accordance with the provision of section 32, as if no deduction had been allowed in section 35 AD. Now let me give you a hint. Because you can see the language of this section is so complicated. You might get confused at what it's trying to explain. Exactly the same thing I have told you multiple times. Whenever you read a numerical topic with a theoretical provision, you might think it's a very difficult. But when I solve the example, you will understand that this implication is so easy. So you can read the language. The total amount of reduction so claimed and allowed in any previous year in respect of such asset is reduced by the amount of depreciation allowable in accordance with the provision of section 32, as if no deduction had been allowed to 35 AD, shall be deemed to be the income of the assessee chargeable under the head PGBP of the previous year in which the asset is to be used. So this is quite complicated in reading, of course, but implication is very simple. We have the illustration number 8 regarding this. Mr. Arnav is a proprietor having 2 units. A carries on a specified business of setting up and operating a warehouse facility for storage of sugar. So sugar has been included in these 14 activity. Warehouse for sugar is included, of course. Unit B carries on non-specified business of operating a warehouse facility of storage of oil. So that is the business which is outside these 14 business. Clear? Now unit A commence operation on 1/4/2022. We are discussing about the preceding previous year. And it claimed deduction of 100 lakhs incurred on purchase of 2 buildings for 50 lakh each for operating a warehouse. Okay. So in the previous year 22-23, we have claimed 100 lakh as deduction, 50 lakh each for 2 buildings under section 35 AD. However, in February 2024, that means in current previous year, 23-24, Unit A transferred one of its unit building to unit B. Examine the tax implication. So let's examine the tax implication. Very simple. So it says there was unit A, unit B, 35 AD, no 35 AD. Not even 35 AD deduction not available. Still, business is again outside of 14 businesses. Okay, even business is not eligible. 35 AD not applicable, and even the business is outside those 14 business activity. Okay, so now 35 AD says we are discussing about first previous year 22-23. It says you have two buildings, 50 lakh each. So total is 100 lakh. In the previous year 22-23, it has claimed 35 AD deduction full in this year. Not an issue. But now the condition was you cannot transfer that asset or it cannot be used for any other purpose. Now out of these two units in the previous year 23-24, one building has been transferred. Out of this 52 buildings, one building for 50 lakh has been transferred to this business, which is a not eligible business. So now the section we were discussing, it says, now what will happen in case of that one building, which was 50 lakh rupees? Suppose if this building has not claimed the deduction in previous year 22-23. Suppose if this building does not claim deduction under section 35AD, just suppose that this building does not have deduction for 35AD, then what will happen? That this building must have claimed the depreciation in previous year 22-23 at the rate 10%, because the building DAP rate is 10%. So we will assume that if this asset has been transferred, then we need to assume that no deduction section 35 if would have been allowed. If there has been no deduction allowed for 35 AD for that asset, then what would happen? Then in that case, we would have claimed 5 lakh rupees depreciation. So that means the remaining value for the previous year 23-24 would have been 45 lakh. So this 40 lakh, 5 lakh will be your deemed PGBP income. So this 40 lakh is going to be taxable in previous year 23-24 because you just violate the condition. You just have to claim the depreciation for 5 lakh, but you have claimed 50 lakh. So balance 45 lakh is going to be your deemed income in this year. And for the purpose of unit B, the actual cost, the value of this building, which is going to be the part of block of asset, will be 45 lakh. So whatever will be your income in this unit, that is going to be the cost for the purpose of block of asset of unit number B. Exactly the same will be the cost in the hands of unit number B. So that is the illustration number 8. You can see it, the deeming provision. So as per section 35 AD 7B, the 45 lakh will be the income in the hands of unit A and 45 lakh will be the cost in the hands of B. That was section 35 AD that has been completed. It was a huge section, of course. Now we are moving on to the question or query session. Jay Patel, sir, I do illustration and test your knowledge, sum of module and RTO and MTP. Then this is enough. Yet it's more than enough. Let me give you an advice also. You should go for mock test paper always. Every one of you, please listen carefully. Please solve all the illustration, test your knowledge question, then try some 3 or 4 attempt last previous attempts question. RTP if you are going to do, it's very, very good. But please go for mock test also. It will definitely going to make you feel that what kind of question, what kind of atmosphere, what kind of environment in the examination will be there. So you should download the mock test paper. Institute is doing everything for you. They're also providing mock test paper. Download the mock test paper, set a timer for 3 hours, and solve it like an examination. And if it's possible, if you have some your good friends, sit together and solve it. And after the solution, after the time period has been over, kindly solve the question paper for each other. Like you should check your friend paper, he will check your papers. The solution is on the portal, and whatever marks you allot to your friend or vice versa, after the total marks you will allot it to your friend, kindly deduct the 15%. Reduce 15%. Suppose you scored as per your friend provide you 55 marks in any mock test. Then reduce 15% of 55 marks. Only consider 85% as the marks you got. That will be technically the real marks, because in the examination that will be might be the real marks you will get. So the more practice, after some time you will see that initially if you are getting 55, after 2 or 3 mock tests you will be scoring 70 marks, 75. So if you are able to get that 70-75 marks bar from your friend in mock test scenario, that really means that you will able to score very good marks in your examination. So please do this. This is really good. And yes, that is enough. If you are doing so much of these things, that will be enough for you. Okay. Srinivasan Venkatanan, can you please go slowly? It's not possible. We have to cover huge topics. So we have to go little fast. You can see these video again, so you'll be able to understand the thing very easily. Next is Miss Vaishali Bindal is saying, sir, if we sell science research asset only after 2 years, use same calculation? Yes. Even after 2 years, 4 year, 5 year, it does not matter. Same provision will be applicable. Even after 1 year, you sell that in the second year. That is the same scenario will be applicable. Why land expenses are not allowed? Mr. Ankit Gupta, मेरा नाम क्यों खराब कर रहा है बेटा? Ankit Gupta, we cannot claim any depreciation. The value of land does not reduce generally, no? It always appreciate. So that's why we cannot claim any depreciation on it. So depreciation is allowable only on those assets the value reduce with time. So because it does not happen with land, so there will be no depreciation, no deduction in case of land anywhere. Okay. Next is, I've explained you, it is an expenditure, but the value appreciate always. This is the basic concept. That's why we do not claim depreciation in accounts also on the value of land. We claim on building construction value, not on land. Okay. Okay, next is fine. So the query has been session has been done. Next, now the next section is section 35D, and that is about amortization of preliminary expenditure. So if you start any business, then the expenditure that is before commencement of business is called generally preliminary expenditure. It's regarding like prospectus expenditure, registration expenditure, drafting MOA, deed, etc. Right? So income tax will allow the deduction which has been incurred before commencement of business as preliminary expenditure, and that will be allowed in 5 equal years, 1/5 every year. What is the provision? These are very simple topic. When an Indian company or resident non-corporate assessee incur any expenditure before commencement of business or extension of a new industrial undertaking, he shall be allowed a deduction as follows. Period of deduction is 1/5 for every year from the year of commencement of business. Now the provisions are, we can summarize in simple way and then we can read the theoretical concept. It says preliminary expenditure in a section 35D. It says any expenditure before commencement of business. So how the deduction will be claimed? There's a formula. Deduction, it says 1/5 of this expenditure actual expenditure as specified, or 5% of hire of capital employed or cost of project. So first of all, you have to find the capital employed, which is given in question, and the cost of project, which has been given in question. Out of these two value, the higher amount, suppose capital employed is 50 lakh, cost of project is 40 lakh. So that means higher is 50 lakh. So 5% of this higher value, that means 2.5 lakh. Or the actual expenditure is specified in the question. Suppose it's 2 lakh rupees. Now, out of these two value, whichever is lower, that is allowable as deduction. But that means for this example, 2 lakh will be selected, and the 1/5 of every year of this 2 lakh can be claimed as deduction under PGBP. That means 40,000 we can claim as a deduction under section 35AD. So the provision is very simple. You have to calculate for the purpose of deduction. In the examination, it will be given like this. There will be a profit and loss account as per accounting provision. In the question, it will be given in the debit side to preliminary expenditure, suppose 1 lakh rupees. This is as per accounting. So accounting might allow full expenditure as your deduction. And after the other expenditure income, suppose net profit is 6 lakh rupees. So for the purpose of income tax, now we have to check with the information given that this deduction is correct or incorrect. So suppose the question says cost of project 10 lakh, capital employed 12 lakh, actual preliminary expenditure 1,50,000. So now we have to calculate the deduction. So the formula says, first of all, you have to find the lower of actual preliminary expenditure or 5% higher of, we can write it like this also, cost of project or capital employed. So cost of project is 10, capital employed is 12. So higher is 12 lakh. 12 lakh 5%, that will come 60,000. 60,000 or actual preliminary expenditure is 1,50,000. Whichever is lower, that will be 60,000. And that is also 1/5 we can claim as deduction. That means only 12,000 can be claimed as deduction. But as per accounting, we have claimed full 1 lakh. So how to solve it? Net profit as per accounting is 6 lakh. This preliminary expenditure will be added back completely because this is wrong. This is as per accounting. And the actual should be allowed as per income tax will only be 12,000. So that will be net profit after implementation of preliminary expenditure provision. But for company purpose, there is two. One formula it says 1/5 of lower of actual preliminary expenditure or 5% of higher of capital employed or cost of project. This formula has been applicable for company cases. If the question relate to company, then we have to solve it with the help of this formula. But if it is other than company, for partnership firm, for individual, HUF, etc., the formula will slightly change. Just a single change will be there. That will be 1/5 same, lower same, actual preliminary expenditure same. And now there is no requirement of cost of project or capital employed, whichever is higher. There will be only 5% of cost of project. There will be no capital employed comparison. Why? because capital employed is only applicable in case of company. For other than companies, there is no concept of capital employed. Clear? So the deductions is 1/5 for every year from the year of commencement of business. Expenses. These are the expenses only which we need to include for the purpose of preliminary expenditure. If any expenditure has been given which is not covered under A, B, C, D, and E, then we cannot include that as actual preliminary expenditure. Clear? So preparation of feasibility report, project report, etc. Engineering services, market survey, etc. Agreement preparation like MOA, AOA, printing of MOA, deed, etc. Legal fees for registration of the company or the organization. And in case of shares and debenture issue, underwriting commission, brokerage, etc., that will form part of actual preliminary expenditure. So the total of these 5 will remain as actual preliminary expenditure. This is the formula in case of company actual expenditure. So actual expenditure means point number A till E. Total of these point number A and E will be actual expenditure. That will be compared to 5% of higher capital employed or cost of project. Then the 5% will be compared to actual expenditure. The lower will be allowable expenditure. 1/5 of that can be claimed. In case of other, actual expenditure or only 5% of cost of project. Clear? Next, amortization of preliminary expenses. The detailed provision is over here. We have made the summary before the detailed provision. Now we have the detailed provision. You can go through it. You can read it, of course, by yourself. All the provisions has been discussed in summary case. Overall limits. This is again the diagram for the purpose of that 5% cases. The meaning of cost of project. The cost of project means the total value of fixed asset. The total value of fixed asset as on 31st March 24. That says, and the last day of the previous year in which the business of assessee commenced. The actual cost of fixed asset. All fixed assets cost at the end of the previous year will be considered as cost of project. Clear? Capital employed definition is given over here. You can go through it, of course. Audit of accounts, etc. The deduction will be available to the company and the non-corporate assessee. Those are resident. No other deduction. Amortization of expenditure incurred under voluntary retirement scheme. If any expenditure on voluntary retirement scheme has been incurred by the employer, then 1/5 of that can be claimed as a reduction in 5 consecutive years. This is very simple theoretical provision. You can read it. Now moving on to our other deduction under section 36. We have almost 12 separate deduction under section 36 also, which we are going to discuss one by one. These are simple provision. The huge deduction, the huge concept was depreciation, additional depreciation, terminal depreciation, section 35, section 35AD, section 35D. We have completed those sections. Now section 36, consider certain expenditure which can be claimed as deduction under PGBP. And the good news is there's no very much detailed numerical treatment in any of these cases. These are mostly theoretical and you might be able to understand only with the help of the heading also. Just like in the point 1 it says, insurance premium for stock, stores, etc. Of course, it's a business expenditure. So if you pay insurance premium for your business asset, for your stock, etc., that will be allowed as a business expenditure. Health insurance provided for employee, etc. So one by one, we are going to read these provisions. Insurance premium paid. If insurance policy has been taken out against risk, damage or destruction of the stock or stores of the business or profession, the premium paid upon this will be allowed as a business expenditure. Okay. premium paid by employer for health insurance of employees. So if this clause seeks to allow a deduction to an employer in respect of premium paid by him by any mode of payment other than cash. Remember, if the premium has been paid in cash, deduction will not allow to affect or to keep in force an insurance on the health of employees in accordance with the scheme framed by government. Bonus and commission, these are deductible in full, provided the sum paid to employee as bonus or commission shall not be payable to them as profit or dividend if it had not been paid as bonus or commission. So always remember, under income tax, if anything has been paid as a part of profit, that we will pay you this much of bonus, 5% of bonus on the profit of the business, that cannot be treated as an expenditure. That will be technically appropriation, like dividend. So that is bonus commission allowed if it is not based on the profits. If it's based on turnover, it will be allowed. If it is based on monthly basis, it will be allowed. Anything if based on profit of a business cannot be allowed as a deduction. Same like income tax paid. Income tax we calculate upon the profit of the business. So income tax cannot be allowed as a deduction under income tax as expenses because it has been calculated on the profit. So if anything is going to be calculated on profit, net profit, that is not going to be allowed as a deduction. Interest on borrowed capital. So if you have taken loan for the purpose of business, whether for stock, whether for your asset, etc., that interest can be claimed as a deduction. For the purpose of asset, of course, the interest part, which is up to put to use of asset, will form part of the capital asset, and any interest which has been paid after put to use of asset will be your revenue expenditure. And then, of course, any loan for the purpose of stock, etc., is going to be claimed as a deduction of interest as a business expenditure. Deduction of interest is allowed in respect of capital borrowed for the purpose of business or profession in the computation of income under the head PGBP. It's a simple thing. Of course, we all know that any loan, if any capital has been borrowed for the purpose of business, that is going to be allowed as a business expenditure. Capital may be borrowed for several purposes like acquiring a capital asset or to pay off a trading debt or a loss, etc. The scope of the expression for the purpose of business is very wide. Capital may be borrowed in the course of existing business as well as for acquiring asset for extension. They both are same. Remember, for the purpose of asset, if the capital has been borrowed, then till the date on which the asset was first put to use shall not be allowed. That interest up to put to use will not allowed as a revenue expenditure, but will form part of the asset and we can claim the depreciation on it. Okay. Discount on zero coupon bond. If you have issued some zero coupon bond and allowed discount on it, then discount can be claimed as deduction on proportionate basis. Contribution to provident and other fund. If employer contribute anything for employees provident fund or approved superannuation fund or gratuity fund, then the employer can claim the deduction regarding it as a business expenditure. Same, point number 7, employer's contribution to the account of the employee under a pension scheme. Refer to section 80 CCD. Now, what is the pension scheme under section 80 CCD? That will be discussed in deduction chapter. For the time being, you can understand that 80 CCD is a kind of a contribution scheme, and if employer paid anything for employee under 80 CCD scheme, then deduction can be claimed by employer, but up to only 10% of salary of the employee in the previous year. Only up to 10% of the salary of the employee. For the purpose of salary, it means basic salary plus dearness allowance if as per terms of employment. So suppose employer paid 2 lakh rupees as a contribution in section 80 CCD, 2 lakh rupees. But the 10% of basic salary and DA term comes 1,80,000. Then only 1,80,000 can be claimed as a deduction. So the restriction is only maximum up to 10% of salary can be claimed as a deduction. We can see it with the help of an example. This is the example. X Limited contribute 20% of basic salary to the account of each employee. Okay. Under a pension scheme referred to in section 80 CCD, DNS allowance is 40% of basic salary and it forms part of pay of the employee. Compute the amount of deduction if the basic salary of the employee aggregate to 10 lakh rupees. So you can see that employer paid 20% of basic salary for 80 CCD purpose. So basic salary was 10 lakh. That means the contribution by employer is 2 lakh rupees. But we can only allow up to 10% of basic salary plus DNS allowance. Basic salary is 10 lakh and DNS allowance, it says 40% of basic salary. That means 4 lakh rupees. 14 lakhs. So only 10% of 14 lakh can be allowed as a reduction. That means 1,40,000. And he wants to claim how much? 2 lakhs. So that means how much is disallowed? How much is not going to be allowed? How much is inadmissible? That is 60,000 rupees cannot be claimed as a deduction. It's simple. So I am actually solving all illustration of the study material and we will solve, of course, test your knowledge also. So just be with me and you can see basic salary 10, DNS allowance 4 lakhs. So 14 lakh is the salary for the purpose of this reduction. Actual contribution 20% of basic salary, which is 10 lakh. So that means 2 lakh. But allowable will be only 140, 60,000 will be disallowed. Now point number 8 is very important. Very, very important. We will discuss this point with the help of a diagram. Before that, let me take the queries if there is anyone. Mr. Santosh Das asking, sir, how to go for actual expenditure? You might be asking Santosh for section 35D. And of course, as we discuss now section 35D, so you might understand now how to calculate actual expenditure. So I have explained you that there are A, B, C, D, E points has been given in the summary part in which there are certain expenditure like market survey expenditure, like project report expenditure, like drafting of prospectus, etc. So the total of these will be my actual expenditure. So now these actual expenditure or 5% of higher of cost of project or capital employed. So whatever value is higher, 5% of that value or actual expenditure. Then the lower, 1/5 is allowed as deduction. The lower limit not provided in the chart. Can you please clarify which lower limit, Srinivasan, you are talking? Kindly tell me in detail. Okay. Now section 36 we were discussing and now we are on point number 8. So this is amount received by an assessee employer as contribution. So what is the provision regarding it? Let me explain you. After this, we will go for a break. So let's discuss point number 8. The point 8 says, under section 36, it says contribution to approved funds. So there are two kinds of contribution. One is employee contribution and one is employer contribution. So the provision says, suppose there is an employer, there is an employee. Employer pays 50,000 salary to employee, on which 50,000 employer contribute 10% after deducting from the employee salary to the provident fund or any approved fund. So that means this 5,000 will be deducted as a contribution. So employee will receive 45,000 as salary. Under salary head, we also discuss this concept when we discuss the provision regarding provident fund perquisites. Fine. So for this 5,000, employer will deposit. This will not remain with employer. This 5,000 employer will deposit to the specific fund for which it has been deducted. So employer will deduct and later on he will deposit this amount to the employee provident fund or any other approved fund. So technically this 5,000 is just taken from employee right now, but it's going to be deposited, of course, in the account of the employee only. So that is called employee contribution. And the concept says this is employee. A certain amount need to be deposited by employer also. Suppose in this example, out of the salary, 10%, that is 5,000 is deposited by the employer on behalf of employee, and there's own contribution also. Suppose employer deposits 7,000. So in this first part, we are discussing about the treatment of this 5,000 contribution. So you will not get confused. And in this case, we will discuss about the 7,000 concept. Now what the provision says? The provision says if employer deducted and deposited, this amount 5,000 should be deducted and deposited by employer up to due date of fund. All fund having a certain due date for deposit of that amount. So that due date will be given in the question. So if this 5,000 has been deducted and deposited by employer up to due date of fund, that will be given in question. The due date will be given and the date on which employer deposit that amount also will be given in question. So if it has been deposited and deducted up to the due date of that fund, in that scenario, employer can claim deduction of this 5,000. Clear? Otherwise, if employer was not able to deduct it and deposit it up to due date of that fund, this 5,000 need to be deposited under that specific fund for which the amount has been deducted. But if employer fails to do so, then deduction lapse. Even if the employer deposit the amount in the very next day with the penalty, etc., still employer cannot claim the deduction of this 5,000. This deduction will be lapse. In case of employer deduction, the provision says if deducted and deposited up to due date. Now the date will be changed. The due date of ROI, return filing due date. In this case, the date should be the due date of that fund. But in this case, the due date up to the due date of ROI. The contribution can be done up to the due date of ROI. ROI return filing due date, return of income due date, which will be 31st July or 31st October, as the case may be. So if this 7,000 has been deposited by employer up to due date of ROI, then deduction can be claimed. But otherwise, in this case, there's a benefit, but that it won't lapse. Otherwise, deduction in the year deducted and deposited. So the provision says that employee contribution which need to be deposited by the employer on behalf of employee, if deducted and deposited up to due date of the fund, then deduction can be claimed. Otherwise, deduction will be lapse. For example, 5,000 need to be deposited every month. Of course, it's a monthly payment. Nine months contribution has been deducted and deposited. 9 months contribution has been deducted and deposited up to due date. That means 3 months deduction will be lapse. That will be 15,000. So only you can claim 45,000 as a deduction and 15,000 will be lapse. Clear? Now a very interesting. Just a second. Let me tell you one thing. Under section 36, this concept is here. We are discussing section 36, 8th point. So section 36 is regarding only employee contribution concept. Under section 36, employer contribution concept is not given. In the notes, when we will read, you will see only this concept we are going to discuss. This concept is the part of section 43B, which will come later in the PGBP head. But why we are discussing 43B with section 36? Because if I will teach you only section 36 over here, this concept like contribution, deduction, deposited, and after some time when we will discuss section 43B separately, so you might get confused that this concept we have discussed already, but the concept are different. One is regarding employee contribution, one is regarding employer contribution. So that's why I have made a single diagram for both of them. So you will understand that this is section 36, this is section 43B. So when we will discuss the provision theoretically for section 43B, we will not make again a diagram because we have already summarized both provision in this diagram only. We have section 36 as well as we have section 43B. So employer contribution is the part of 43B, but the concept is regarding the approved fund contribution. So for the purpose of better understanding, we summarize both contribution in the same place. If any of you must have noticed very strange things in this section 36 part, the employee contribution. I'm just explaining you because you might have understand what kind of provision this is. If you can see, you will see that under section 36, very strange provision is here. That employer paying 50,000, 5,000 deduct for the purpose of contribution. So technically employee receiving 45,000. Fine. Now for the purpose of section 36, if you will see this, how much salary employer might have claimed as a deduction. In this case, that will be 50,000. For the purpose of contribution does not mean salary will always be claimed as an expenditure 50,000. Now the question says that the employee contribution of 5,000, if deposited by employer, suppose if deposited by employer, then separate deduction of 5,000 can be claimed. So it might feel unfair that technically employer just paying 50,000. Then why deduction of 55,000 can be claimed by employer? If you will see in detail, then you will understand there's a very different concept like this. That employer is going to pay 50,000 practically. Now what he's saying, he is paying 45,000 to the employee and 5,000 to the fund. But ultimately, out of his pocket, only 50,000 has been gone. But for the purpose of deduction, if you will see, the salary will say you can claim the full amount of deduction as a salary. And this section is specifically allowed 5,000 as deduction. So that means technically, are we claiming 55,000 for the expenditure? But we already paid only 50,000. So it might get confused. If you read this concept, you might feel this is a confusion, but this is not the whole picture. The story is incomplete because we have a section 224 which explain the definition of income. That is the chapter number 1. You must have gone through the provision. In this section 224, there is a provision which says regarding this point. This is the problem, or this is the beauty of income tax. That what we have discussed in chapter 1, section 224 is now going to correlate with section 36. And if you have not read section 224, this point, and if somebody is going to ask you, tell me, if he is paid 50,000, then how you are allowing him 55,000? That is not correct. So if you able to recall the provision of section 224, then you can answer him, no, the deduction will be only for 50,000. How? Because the section 224 income says, if any amount from employee has been recovered or received by employer for the purpose of contribution to any fund, that will be treated as income of employer. So that 5,000 as you deduct from the salary of assessee, that means employee, that 5,000 as soon as you deduct will become your income in the credit side. Clear? So if you deposit that 5,000 within due date, that will be your expenditure at debit side. So the effect will be nullified. How much you have paid? 50,000. Technically, how much you are going to claim? 50,000. This is the beauty of income tax. And if he is not able, suppose he is not able to deposit this, so he cannot claim the deduction as we discussed in section 36. Now the problem will arise. Now you can see he has paid 50,000, but net benefit of deduction will be only 45,000. Why government made this? Government says as soon as you will deduct the amount for the contribution out of the salary of employee, we will treat it as your income. So now if you are not able to deposit it up to due date, that will remain your income. So that is practically, it's not your income, it's the income of employee. But technically, your deduction will automatically reduce by 5,000. So to avoid this 5,000 lower deduction, what employer will do? He will go fast and deposit this amount up to due date of fund. So he can claim the 5,000, so that will be nullified. So if he won't be able to do that, so in that scenario, his deduction amount will be reduced by automatically 5,000, because this 5,000 will remain its income and salary will be 50. So net benefit is only 45,000. So this is very interesting. So because of section 224, this provision has been nullified. And if Somebody asks you that you are claiming high deduction, so please go and explain him that you are not completely understood the provision of income tax, because there is section 24 which includes this 5,000 as your income. This is only applicable in case of employee contribution, not in case of employer contribution. Employer contribution is extra 7,000 paid by employer, that is allowed as a deduction if it is paid by employer. But for the purpose of employee contribution, this has to be applicable. This is just for your understanding, not the part of your, of course, solution. But if any one of you have that confusion in your brain after the class, that salary 50,000 and 5,000, so we are claiming extra. So I just need to remove that confusion in your mind. So now you'll be able to understand what exactly we did. This is point number 8. Point number 8. Okay, fine. Let me take queries and then we will go for a break. Preliminary chart and study material. Okay, let me take that. If a business purchase a machine of 1 lakh, he pays it at 10 equal installment in cash in different days. Is it cost of rupees 1 lakh as per? Yes, the cost will remain 1 lakh. You cannot pay it for single day. If you are distributing that amount in number of days, you can claim that. So somebody is asking regarding the preliminary expenditure chart. Whichever is higher. This is simple. What is the problem in that? You are asking lower limit is not providing because the chart explained regarding only the higher part. The maximum aggregate, the overall limit is explained. If you'll go for the deduction part, that will be explained over there that 1/5 of the expenditure allowable will be allowed. What is the expenditure allowable? That will, the chart just explain you the overall limit. So whatever I explained you, the lower will be allowed as a deduction. The excess, if any, of the qualifying expense shall be ignored. Indirectly, this line is says that excess will be ignored. That means the lower is going to be selected. Okay. So that was point number 8 we discussed. And now we have left at point number 9, 10, 11, 12. And then residual expenditure. Okay, fine. So, Mr. Akash, can we go for a break for 10 minutes? Welcome back, everyone. I hope, as usual, you all must have your tea, coffee break, and must restored your energy for the remaining class. So, of course, PGBP is a huge topic. You might be feeling that a lot of things we are discussing, depreciation, and sometimes it becomes monotonous, very boring also. But trust me, if you are with me, then the time when we will complete our PGBP, then at the time when we will discuss the test your knowledge question, you will feel that all the provisions were really, really easy. So just stay with me, focus during the class, and PGBP will be a easy topic after when we will complete our lecture regarding it. So what we discussed in PGBP regarding deductions yet. From section 29, the deductions part start. Section 30 talks about building deduction regarding repair, maintenance, and taxes, insurance. Then section 31, that was regarding plant and machinery and furnitures, what expenditure we can claim. That was a very simple topic. Section 32 was a huge topic regarding depreciation, which talks about the block of asset concept, when we can claim 0% DAP, when we can claim full rate of depreciation, when we can claim half rate of depreciation. Then the format for block of asset, opening plus W actual cost of asset purchase, then money receipt. Then we discuss the actual cost definition in different scenario. Then terminal depreciation and additional depreciation also came. That was all under section 32. Then balancing charges. Then we also discussed the carry forward of depreciation allowances provision under section 32 again. Then moved on to section 35, scientific research, sale of scientific research asset, or section 35 AD asset. Then we complete section 35 AD, specific businesses in which we can claim the deduction except the land, goodwill, and financial instrument. Then we completed section 35D, that was regarding preliminary expenditure, in which we discussed the expenditure which is incurred before commencement of business can be claimed deduction for 5 years. That means 1/5 every year from the year in which business commences. There are certain specified expenditure. We have to compare it with 5% of higher in case of capital employed or cost of project. If it is a company case, if it's not a company, then it's only 5% of cost of project. Then after that, we just discussed section 36, which is a normal section, which consists separate small expenditure treatment, medical insurance of employee, stock and stores insurance of a business, then bonus and commission. The contribution part was the thing that we last discussed. So when we will end this topic, the PGBP, I promise you will find it a very, very easy chapter, and it's a very scoring also. So there are some queries. Miss Soumya Jain is saying, letting out of asset does not constitute the business of the assessee, then will DAP deduction allowed or not? If deduction is of depreciation not allowable in PGBP, then you can claim it under income from other sources also. But letting out is a business. If it is a frequency in nature, decided a business activity, then it will be a business. You can claim the DAP under section 32. Else you can claim it under income from other source also. That is a provision also mentioned in income from other source. Okay, we all are back. Sir, biological and articles manufacturing under 35, land and building both are not available. I am not sure what you are asking, Mr. Nagaraj. It's not in detail. But only land cannot be claimed as deduction under section 35. Building is the construction part. That will be given separately in the question. So building part can claim as deduction, but the land part cannot be claimed as deduction. So now moving on to our story part. So here's a very short and of course a very nice story for all of you. The story is like this. एक गांव था, विलेज ऑफ कोर्स. वहां पर एक पर्सन था जिसके पास एक घोड़ा था, हॉर्स. बड़ा वीक सा था, बहुत ही, सब लोग कहते थे बेकार घोड़ा है, किसी काम का नहीं है. और वो जो पर्सन था वो बहुत गरीब था, पैसे भी बहुत कम थे उसके पास. लेकिन वो कहता था नहीं, शायद मेरे किसी काम आएगा कभी. तो बाकी सब लोग उसको कहते थे कि ये हॉर्स अच्छा हॉर्स नहीं, इससे फ्यूचर में आपको लॉस होगा, मेंटेनेंस पर उसके एक्सेट्रा. बट वो पर्सन नहीं माना. वन डे वो पर्सन एक जंगल से जा रहा था और वहां पर एक वेल था, कुआं. फाइन, खाली पानी नहीं था. तो वो जो हॉर्स था वो गलती से उस कुएं में गिर गया. अब जो वो नीचे गिरा तो वहां बहुत सारे स्नेक्स थे, स्कॉर्पियंस थे. तो वो हॉर्स एकदम स्टैचू बन के खड़ा रहा, उसने बिल्कुल भी आवाज नहीं करी जिससे कहीं वो उसे काट ना ले. तो जो उसका मालिक था, जिसने देखा कि वो नीचे गिर गया, उसने बहुत आवाज लगाई हॉर्स को नीचे कि आर यू ओके. बट नीचे से हॉर्स कुछ बोल ही नहीं पा रहा था. उसको बड़ा दुख हुआ, उसको लगा शायद उसके चोट लग गई है हॉर्स के, और अब वो, मैं उसे निकालूंगा कैसे बाहर, और निकालने में बहुत खर्चा आएगा, और फिर उसका ट्रीटमेंट भी करना पड़ेगा. अगर उसको चोट लगी है उस पर भी बहुत पैसा खर्च होगा जो मेरे पास नहीं. तो वो गांव गया, उसने अपने गांव वालों को बताया कि ऐसे ऐसे मेरा हॉर्स है, वो एक वेल में गिर गया है और उसकी आवाज नहीं आ रही. तो माइट भी वो बहुत हर्ट है, उसको बहुत चोट लगी है, तो सब चलो. तो बहुत सारे गांव वाले इकट्ठा हुए, उन्होंने सोचा और सब नहीं करे, वो बेकार हॉर्स था, वीक था, अभी उसको बचाने का कोई फायदा नहीं. उसे निकालोगे तो उसका ट्रीटमेंट पे बहुत खर्चा होगा, बहुत एक्सपेंस होगा, और वो आपके पास है नहीं. तो सबने डिसाइड करा, एक काम करते हैं, उस वाले वेल में मिट्टी डालकर उसे भर देते हैं, जिससे कि कोई दूसरा हॉर्स किसी का या कोई इंसान उसमें दोबारा ना गिर जाए, बिकॉज ये वाला हॉर्स तो गया. अब ये सारी बातें वो नीचे जो हॉर्स था वो सुन रहा था, कि सब लोग उसके बारे में सोचते हैं कि वो यूजलेस है, किसी काम का नहीं, वेस्ट है, अपने मालिक को परेशान करने के लिए है. तो वो सब सुनता रहा और उसको ऐसा कॉन्फिडेंस आया कि नहीं, ये गलत है. तो उसने देखा वहां उस वेल में एक बैग था, बैग. उस बैग में काफी सारे गोल्ड्स रखा हुआ था, गोल्ड कॉइन्स थे. तो उसे लगा कि अगर मेरे मालिक को ये कॉइन्स मिल जाएंगे तो वो बहुत खुश होगा. तो उसने बहुत हिम्मत करके, क्योंकि वहाँ बहुत सारे इंसेक्ट्स थे, स्कॉर्पियंस थे, स्नेक्स थे, बहुत हिम्मत करके उसको अपने मुंह से पकड़ा, अपने माउथ से बैग को, और स्टैचू की तरह खड़ा रहा. अब लोगों ने ऊपर से मिट्टी डालना शुरू करा, सब लोगों ने ऊपर से मिट्टी भरना शुरू करा उसमें, जिससे कि वेल भर जाए और कोई और जानवर उसमें ना गिर पाए. धीरे 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 जब वो मिट्टी डालते थे तो वो उस हॉर्स के ऊपर गिरती थी, और वो उस मिट्टी को अपनी बॉडी से नीचे गिराता था. मिट्टी जमीन पे आती थी, उस मिट्टी पे खड़ा हो जाता था, तो उसकी हाइट ऊपर आ जाती थी. थोड़ा और मिट्टी डाला था, फिर ऊपर ऊपर. तो जैसे जैसे ऊपर से वो मिट्टी डालते गए, वो उस डर्ट को साफ करता था और उसके ऊपर खड़ा होता गया. थोड़ी थोड़ी देर बाद देखा तो जब उन्होंने काफी मिट्टी डाली तो हॉर्स पूरा ऊपर आ गया. और उसके पास क्या था, उसके पास दैट गोल्डन कॉइन्स बैग. उसका मालिक बहुत खुश हुआ. उसने क्या देखा, तुम सब लोग कहते थे ये किसी काम का नहीं है, बट देखो इसने मेरे लिए कितना कुछ किया. सो फाइनली होता ऐसा ही है. जो लोग होते हैं हमारे आसपास के, दे एक्यूज अस. वो हमारे ऊपर डर्ट फेंकते रहते हैं कि तुम किसी काम के नहीं हो, कुछ नहीं कर पाओगे, यू आर यूजलेस एटसेट्रा. बट हमें क्या करना है, सॉर्स की तरह एकदम स्टैचू, साइलेंस. साइलेंस स्पीक्स लाउडर देन वर्ड. सो वर्क हार्ड इन योर साइलेंस एंड लेट्स योर सक्सेस स्पीक. सो इन द सेम वे ना, जब लोग आपके बारे में बेकार बातें करते हैं, इग्नोर देम. आप अपना एफर्ट करते रहो, बिल्कुल आराम से, साइलेंटली. वन डे ऐसा आएगा जब आप जब सक्सेसफुल होगे तो सबको पता चलेगा कि आप कितने कमाल थे. तो जो लोग आप पे बिलीव करते हैं, जैसे कि उसका मालिक उस पर बिलीव करता है, वैसे आपकी फैमिली आप पे बिलीव करती है, लेकिन बाहर के लोग आपको बहुत नेगेटिविटी देते हैं. तो जस्ट उस नेगेटिविटी को उस सैंड की तरह अपनी बॉडी से हटा दो, अपने ब्रेन से हटा दो, और उससे अफेक्टेड नहीं होना है. अपनी मेहनत करते रहो जो भी आप कर रहे हो, एंड डेफिनेटली one day you will be a CA very soon. So that was the story for today. Moving on to the provisions. So we were on point number 8. We have discussed that point regarding the contribution to the fund. The bad debts, these can be deducted subject to the following condition. You can allow your bad debts if it has been write off. If the provisions has been made for bad debts, or the reserve has been created, that is not going to be allowed as a deduction. Only bad debt which has been written off in the books of account will be allowed as a deduction. Theoretical provision, you should go through it yourself, because expenses on family planning by a company, remember this deduction is only available for a company, not for any other assessee. So if you are a company and there is any expenditure of revenue nature bona fide for the employee benefit of family planning, that is going to be allowed as deduction. But if the expenditure is for capital nature, then 1/5 of the expenditure will be allowed as a deduction. Okay. Deduction of security transaction tax, and the 12th point talks about the commodity transaction tax, STT and CTT. Both will be allowed as deduction under PGBP if these securities are your stock in trade. If it is not your stock in trade, the treatment will be in capital gain if these are your investments. But if the securities are your stock in trade, then the STT or CTT paid in respect of these commodities or securities will be allowed as a business expenditure. So section 36 has been completed. Now we have on to section 37. Section 37 is a residuary expenditure section. It's a very interesting section. If I'll say there's a common thing in all the provisions of PGBP, what we discussed till now, till section 36. The common thing is every section explain about certain specific expenditure, only certain specific expenditure. 31, 29, 30 was building, 31 is plant and machinery, 32 was depreciation, then 35 scientific research, 35 AD specified business, 35D preliminary expenditure. Then we move on to section 36. Even section 36 have certain points, and each point explain about certain specific expenditure treatment under PGBP. So there is no general provision. Like suppose there is no provision we have studied yet which talks about office expenditure. Will office expenditure is a business expenditure or not? There is no specific section. There is no specific section regarding salary will be allowed as deduction or not. There is no section which talks about purchase for business. There is no section like shop expense, travel expense, conveyance expense, other expenditure which might be relatable to the business, advertisement, sales promotion expenditure. They will be allowed as business expenditure or not? Will they treat as a business expenditure or not? So we do not have a specific section for all the expenditure which might be related to our business. And we cannot make it like that, because for that we have to make a lot of multiple more sections, because in different business there might be different kind of expenditure. So for each kind of expenditure we cannot make a specific section. So for the removal of that problem, section 37 has been inserted and it's called residuary expenditure. It says if any expenditure fulfills certain condition which has been given in section 37, then that expenditure is going to be allowed as deduction. If any other section does not stop it, does not object it. So section 37 is like a very simple section, but it solves a lot of problem under PGBP Act. So if there is any specific expenditure like depreciation, then we have to go to section 32. If there is section preliminary expenditure, then we have to go to section 35D, because we have a specific section for that. But if there is any expenditure like office expenditure, shop expenditure, conveyance expenditure, purchases, salary, etc., for that if any specific section does not exist, then we will go to section 37. And if the condition under section 37 has been satisfied, you can claim that expense as your business expenditure, provided no other specific section objected. Clear? So we can say there is generally three conditions. Conditions are multiple, but basic are three conditions under section 37 it should not be a personal expenditure. Personal expenditure cannot be allowed in business, like medical treatment of proprietor, medical treatment of family members, medical treatment of wife, etc. That cannot be claimed as deduction. School fees of children, etc. These are personal expenditure. These are drawings kind of thing. So we cannot allow them as a deduction. So that should not be a personal expenditure. That is only for business purpose. The expenditure should be for business purpose. That should, for business purpose, that should not be a personal expenditure that it's been incurred in previous year. So if these general three condition has been fulfilled, that should not be in the capital nature. Because if it is in capital nature, then depreciation will be claimed. We are talking about revenue expenditure. So it should not be a personal. It should be for the purpose of business. It should be incurred in the previous year. It should not be in capital nature. These are general condition. If it is satisfied and no other section objected, then you can claim that as a deduction. For example, there is a provision which says you cannot pay more than 10,000 in a same day to same person, whether it's for capital or revenue. So if you paid salary 15,000 in cash to your employee, then it is not a personal expenditure. It fulfills this condition. It is for business, yes. In previous year, yes. It's capital, not expenditure, yes. But there is a specific section. This provision in respect of revenue expenditure will come under section 40A. That object, that expenditure should not exceed 10,000 in a same day, same person. And because it object that section 40A, object in this case, so you cannot claim this expenditure under section 37 also. So these are the conditions, very general condition. This is a residuary section under which only business expenditure is allowable, but not the business losses. The deduction is limited only to the amount actually expended and does not extend to a reserve created against a contingent liability. There are certain conditions. The expenditure should not be for the nature described in section 30 to 36 because these are specific sections. If it's regarding depreciation, then section 37 will not apply. Section 32 will explain. Okay. Incurred in the, of course, accounting year. It should be in respect of a business. It must have been incurred after the business was set up. It should not be personal. It should be for business purpose. It should not be capital nature. The expenditure should not have been incurred by SSC for any purpose which is an offense or is prohibited by law. Of course, if you say I give bribe of rupees 50,000 to a person for my business, so that is my business expenditure. No, anything which is prohibited under any law cannot be claimed as a business expenditure ever. Expenditure incurred on keyman insurance policy. We have discussed this in PGBP also, that if any amount received on the maturity of keyman insurance policy by the employer received. So in the same way, if any premium is paid on the keyman insurance policy, that is going to be allowable as business expenditure. Disallowance of CSR, we all know corporate social responsibility expenditure has been introduced some year before, and section 135 of Companies Act 2013 explained about it. But under income tax, if any expenditure has been made on CSR, then it cannot be claimed as a deduction under income tax. Under income tax, CSR expenditure is disallowed. They cannot be claimed as a business expenditure yet. Clear? So it's a very simple one-line provision that CSR expenditure is disallowed under the Income Tax Act. In these whole paragraph, it has been explained what is the meaning of CSR expenditure, etc. That is just for reading purpose. For the purpose of income tax, this expenditure is not allowable under Income Tax Act. Okay. Advertisement in souvenir of political party. If you pay anything to political party, that will not be allowed as a business expenditure in any case. Okay. So that was section 37. Now moving on to our next topic, assignment number 3. PGBP topic, unit number 1, topic part 1 we have completed. We have completed part number 2 also. Now we are moving on to our part 3, which says some are destined to succeed and some are determined to succeed. So you should be the second one, of course. So now moving on to our deductions not allowed in section 40. We have discussed section 36. We have complete section 37. Now we are on deductions not allowed in section 40. It's a very, very important topic, which says there are certain payment on which TDS need to be deducted. Now, what is TDS? That is tax deducted at source. Here is a specific chapter also, I guess chapter number 7, I guess you have, in which the TDS advanced tax concept will be discussed. So there are certain provisions, there are certain payments on which income tax department says TDS need to be deducted. What are those payments? That will be discussed in chapter 7. What PGBP is saying? PGBP is saying that if there is any expenditure on which TDS need to be deducted and deposited, but you did not do this. You did not deducted or deposited the TDS on such payment. Then the deduction of that expenditure cannot be claimed in certain circumstances. For example, a businessman is paying professional fees to an advocate, 50,000 rupees. Upon professional fees, TDS need to be deducted and deposited as per section 194J of TDS. We do not know about it because that will be discussed in 194J, will be in the TDS chapter. But for time being, there is a requirement of deduction of TDS under section 194J in case of professional fees. So suppose a businessman paid a professional fees of 50,000 to an advocate and did not deduct the TDS. Now we are talking about that 50,000. What he has paid 50,000 might need not to be deducted as a business expenditure in certain cases because TDS has not been deducted on that amount. So we will discuss in point number 1, what is the provision regarding deduction of TDS and what will be the consequences. But there is a problem. What are the payments on which TDS required to be deducted? How to be deducted? When to be deducted? That will be discussed in chapter number 7. So for the time being, we can only understand the provision of that what if TDS not deducted and what is TDS if deducted. So you should not ask me the question, sir, how much amount of TDS should be deducted? When it will need to be deducted and deposited. So in this chapter, we will only discuss if TDS has been deducted, deposited as per the provision of TDS chapter, then deduction will be allowed or deduction will not be allowed. Understood? One more provision, payment exceeding a specific limit, certain specified limit to certain person. So these 2-3 points we are going to discuss in detail under section 40. And that says inadmissible deduction under section 40. There are certain deductions which will not be allowed if the condition of section 40 does not fulfill. First of all, deduction of TDS. So you can see it's a very complicated procedure regarding the TDS, but I have made a diagram for it, so it will really help you to understand the provision of TDS in simple way. First of all, let me take some queries. Illustration 7, Swati is asking, both business are of same nature, even though section 35 AD is not available for one business, we can set off losses. Let me see. Illustration number 7, we set off the losses, of course. Illustration number 7, there was hotel. Both are hotel, and hotels, those are having 2-star category or above, is included in the specified businesses, 14 specified business under section 35 AD. Clear? One of that business is claiming section 35 AD deduction and one is not eligible to claim 35 AD. So it does not matter, Swati, that we are able to claim deduction of section 35 AD or not. But the main concept is your business eligible under those 14 business category. So the both hotels are hotels which has been specified under the 14th business which has been specified in section 35 AD. So set off is possible. Illustration under illustration 17, we did set off the losses of 75 lakh out of the 120 lakh. So we did set off that. Even for deduction available or not, that does not matter. But the nature of business should be same as illustration number 6. One warehouse for oil purpose. So there is oil purpose warehouse does not include under the 14 business category. So deduction was not available, set off was not available in illustration number 6. I've explained the full formula in my summary notes also. Mr. Srinivasan, why you are asking this? In the summary notes, you should go through the notes once again after the class. Kindly summary of section 35D, I have explained that in detail. So you might be just seeing the study material diagram. You are not seeing the summary part I've explained under section 35D. So please, it's over here. You can see this allowable expenditure with the formula in a very simple language I've explained over here. You can read from here and your doubt will be clear. Okay. Okay. Nagaraj, if assessee engaged in biological product in under section 35, land and building both is not available for claiming deduction under section. If it is approved by government for the purpose of deduction, you can claim the deduction of section 35, but under section 35, land cannot be claimed as a deduction. Only building can be claimed as a deduction. Next is Mr. Mohammed Alam is asking what is the meaning of residuary means, which is residual, which is left. So which is this section residuary means, which is we can say separate from others. So residuary means which has been left, like for all section we have a specific section. For all expenditure we have a specific section which is your last resort. So this is kind of the section which is in residuary, which you should be used at last. If there is any expenditure for which we do not have any specific section, then the residuary is the last. जैसे वो कहते हैं ना मिस्टर मोहम्मद, जिसका कोई नहीं होता उसका खुदा होता है, ये वैसा वाला है. Understood? Now got it the meaning of residuary? जिसका कोई नहीं होता उसका खुदा होता है, तो ये वही वाला है. At the end you should go to the section 37. If no other section is going to help you, then go and take the help from this our residuary section. Okay. Mr. Rama is saying, sir, if TDS is not deducted before filing of income tax return or before filing of return to ROC, then it's 30th September 25 for the previous year 23-24. Will the expenditure is allowed? We are going to discuss the provision regarding TDS, Rama. Just these are the provision what we are going to discuss with the help of a diagram. So nobody will ask me that, sir, what amount of TDS should be deducted? Because we are just discussing if TDS deducted, then what will happen? This expenditure will be allowed as deduction or not. The TDS concept, when to deposit, how to deposit, what is the rate of applicability, how much the amount of applicability, that will be the part of chapter 7. Okay. So we are discussing TDS deduction base allowability. So it says any payment on which TDS liable to deduct. So if there's any expenditure or any payment on which TDS is liable to deduct. So what are these payments? That will be refer in chapter 7. So if there is any payment on which TDS is liable to deduct is paid to. So if we are paying anything on which TDS liable to deduct, and this is amount we are paying to, and the pay is non-resident. For example, XYZ Limited is paying some amount, any payment on which TDS liable to deduct. And if it is paying to, there are three circumstances. One, if I am paying it to the person and that is a non-resident. If I am paying to the person and the pay is the non-resident, then the separate provision will be applicable. If pay is a resident who is in India, then separate provision will be applicable. And if pay is a resident who is outside India for the time being, at time of payment, he is outside India. So if he is a non-resident, then does not matter whether he is in India or outside India, it does not matter. Clear? But if you are paying, if XYZ Limited paying to someone who is a resident in India, then this concept will be applicable. If he is paying to a resident who is outside India, what he is paying? Those payments like salary, interest, remuneration, fees, etc., on which TDS liability arises. So if XYZ Limited pay those amount on which TDS liability arises to a non-resident in India, then XYZ Limited can claim that payment as a deduction at its P&L debit side if this condition has been fulfilled. I will upload all the charts today on the portal, so you can see each and every section what we have discussed. We have a diagram for it, so it will be really easy for you to understand. Okay, so if the XYZ Limited paid any amount to a non-resident, whether he is in India or outside India, that payment on which TDS need to be deducted. There will be two situations. As in the case of provident fund, the person who pays the salary to the employee need to deduct and deposit it, the amount of contribution to the specific fund amount. In the same way, the payer XYZ Limited, if paying, for example, 50,000, and suppose the TDS rate is 10%, then he needs to deposit this 5,000. Who? XYZ Limited needs to deposit this TDS to the government. If XYZ Limited is able to deduct and deposit this TDS to the government, then only XYZ Limited can claim this 50,000 as his business expenditure. So TDS deposit is very important from the point of view of payer, because if payer paying any amount to any person on which TDS is liable, and if that amount of TDS which is liable, which have different percentage, 10%, 5%, 1%, 2%, that will be going to discuss in chapter number 7. So if you able to deduct and deposit that TDS to the government, then only you are able to claim that expenditure in your P&L debit side. Otherwise, that expenditure will be disallowed. So what is the case? If the payment is to a non-resident, whether he is in India or outside India, so either we are paying him to salary amount or any other payment like fees, bonus, commission, interest, royalty, etc. So if XYZ Limited paying to any non-resident salary amount, then this condition should be fulfilled. Then only he can claim the deduction of that salary in its P&L. So it says exactly the same concept as in case of provident fund. Deducted and deposited. D&D means deducted and deposited. Kya cheez? TDS. Okay. The TDS we are deducting. TDS need to be deducted and deposited up to due date of TDS. Like Provident Fund, there are due dates of TDS also. So if XYZ Limited, if paying salary to a non-resident who is in India or outside India, then the TDS which is applicable on that salary need to be deducted and deposited up to due date of TDS. If it has been done, deduction of salary allowed to the XYZ Limited to claim. If TDS has been deducted up to due date of TDS. Otherwise, reduction will be lapse. So you can see this provision is just like the employee contribution. They are also deducted and deposited up to due date of fund. If it has been done, deduction of that amount can be claimed. If it is not, deduction will be lapse. In the same case, if TDS is deposit or deducted up to due date of TDS, deduction of salary allowed. For example, salary was 50,000. So 50,000 will be allowed if the payer able to deposit and deducted the TDS on that salary up to the due date of TDS. If it is not so, that amount of salary reduction will be lapse forever. In other payments, except salary, like its interest, commission, brokerage, etc., the condition says deducted and deposited up to due date of ROI. If it's deducted and deposited in due date of ROI, it will be allowed. This is same as case of employer contribution. In that case, there is a deducted and deposited up to due date of ROI. So if the payment is not salary, if it is fees, bonus, commission, then the TDS, whatever amount it is, upon that fees, bonus, commission can be deposited and deducted up to due date of ROI. Due date of ROI of what? XYZ Limited. Due date of ROI of XYZ Limited, that will be 31st of October. Clear? Otherwise, deduction will be claimed in the year of D&D. Deducted and deposited. Clear? So that was scenario if we are going to pay to a non-resident. If it is a salary payment, then deduction will be claimed if it has been deducted and deposited up to due date of TDS. Otherwise, it will be lapse. If this is expenditure is other than salary, then deducted and deposited up to due date of ROI, deduction allowed in the same year. Otherwise, in the year in which the amount has been deducted and deposited. If this payment is not to a non-resident, but it's to a resident who is in India. So if it is a resident who is in India, let me make the diagram on next page. That is our second case. Payment to a resident who is in India. So the good news is, if the payment is to a resident who is in India, then the concept is same whether you are paying salary or any other payment. In case of non-resident, it was different, but in case of resident in India, the concept is same for any payment made to that person. So now the provision says, if TDS deducted and deposited up to due date of ROI, reduction allowed, of course, no problem. Otherwise, now the relaxed provision has been provided. Even you deducted and does not deposited the TDS, then even in that previous year, 70% of expenditure deduction will be allowed. For example, we are paying salary to a resident in India for 10 lakh rupees. So for on this 10 lakh, TDS amount, suppose 50,000. So if we deduct and deposit TDS of 50,000, full deduction can be claimed 10 lakh rupees in the same previous year. We did not deposit anything up to due date of ROI. Even then in this case, in the previous year 23-24, 7 lakh salary can be claimed as deduction. Not an issue. balance 30% deduction of salary, that means 3 lakh rupees, 30% deduction will be allowed in the year deducted and deposited. So only 30% will be disallowed in this year, previous year. In previous year, 23-24, 70% will be still allowed, even without deducting and deposit of even 1 rupees of TDS. 70% will be allowed, only 30% is disallowed. And this 30% will be allowed in the year in which the TDS will be deducted and deposited. Clear? So this is the relaxed provision for the purpose of resident in India. If it is a resident outside India, then we do not need to learn any new provision because it's very simple. If it is a payment of salary, then non-resident provision of salary will be applicable. In case of non-resident, what is the provision? Up to due date of TDS. If TDS deposited, deduction will be allowed. Otherwise, lapse. So in case of salary, if resident outside India, then in case of salary, non-resident TDS salary provision will be applicable same. So there is no new provision. If any payment other than salary, like commission, bonus, remuneration, fees, other payment to a resident who is outside India, then this provision will be applicable. That means same. If other payments up to due date of ROI, deduction will be allowed. If not paid, even that 70% of that expenditure can be claimed as deduction, and 30% in the year in which TDS has been deposited. So if you're a resident outside India, then for the purpose of salary, non-resident concept will be applicable. For the purpose of other than salary, the resident outside India provision will be applicable. Clear? Here is one very important note. Suppose in case of resident assessee, this is only applicable in case of resident case. That means case number B and case number C. In these two circumstances, in case of resident pay, so resident pay is only applicable in this case and this case. In case of resident pay, suppose payer did not deducted or deposited TDS. But the payee, that means that resident person, they filed their return of income themselves and deposit the tax which is accrue or due on that income which they receive from the payer. So payer was not able to deduct or deposit TDS, suppose. Clear? But if pay tax by himself and file his return of income, then it will be deemed that payer has deducted and deposited the TDS, and deduction can be claimed by the payer. So there is a very relaxed provision has been made in case of resident pay, that in case of resident pay, if they deposit tax themselves, not payer, if pay deposit the tax themselves, then we will assume that deduction can be claimed by the payer, supposing that automatically TDS has been deposited. That will be deemed to have been understood that if pay deposit the tax, then the deduction can be claimed by the payer automatically. That was TDS provision. ROI is return of income, the date of filing of return of income, that is called ROI. Yes, in salary, if it is a non-resident, Vaishali, then we cannot claim deduction of salary in any year if we did not deduct the TDS. But that can be possible that out of 12 months, for 4 months, we were not able to deduct and deposit the TDS, 50,000 salary per month, but for 4 months, we were not able to deduct and deposit the TDS. We only deduct and deposit TDS up to due date of TDS for 8 months. Then for 8 months salary, we can claim as a deduction. That means 4 lakh rupees. But that 4 months salary, which is almost 2 lakh rupees, we cannot claim it as a deduction. So that was today class. We have completed a lot of provision regarding it. In the next class, which will be now on day after tomorrow, first we will take a MCQ test. So please get ready in the 30th of November. In the opening class, in the starting, we will take a MCQ test. Then we'll move on to the other provision. Kindly, please revise the provision as soon as we are at the completion of PGBP. So when we will go for test your knowledge question, they are complete question which will include all the provision together in a question. So for that, it is very, very necessary that you should revise all the provision once. So that will be really easy for us to understand the numerical part, the solution part, what we are going to discuss after our completion of notes topic. So if there is anything, okay, yes. So we will discuss the further provision in our next class. So Mr. Prakash, can you close the session?